welcome to the special edition of Dividend Cafe. I was planning to call it the Monday edition that we're doing on Tuesday because of the MLK holiday yesterday. But then, even if we had not been in a Monday holiday week, with today's action, I probably would have done a special Dividend Cafe today, anyways. So, yes, today is Tuesday, January 20th, but we did have a big market sell off I want to address behind one of the stranger catalyst to a market sell-off. I say all the time, it's a very important lesson for investors to never forget that markets do not require a reason to sell off. They certainly do not require a reason that makes sense to you or me. But different catalysts exist that can drive a market sell-off. And today's was the fact that the president of the United States spent much of the weekend saying that he wanted to have Greenland under US control, and that if the European countries resisted that idea, he was going to impose an extra 25% tariffs for American importers to pay. So then Europe responded by saying that we're going to retaliate. And so the prior deals that were announced are vulnerable or up in the air right now, because if the president does this, then we're going to do that. And everything sort of escalated from there. Let me give you the summary of what kind of took place, and then we'll get through our normal categories of the Monday Dividend Cafe. But there's a lot to cover. First of all, the Dow opened down about 700 points, and then it did make a little effort very early in trading today to rally off of that, and that didn't last long. And after about an hour into trading, markets hit their highest level of the day, which was still underwater, and then just proceeded to go straight down from there. We didn't quite close at the bottom, but we closed pretty near it. So the Dow down 870 points, which is 1.75%. The S&P down a tad over 2%. The NASDAQ down almost 2.5%. And so it won't be a big surprise that in line with that market index behavior, technology was the worst performing sector of the day, down, where is tech here? Down almost 3%, and consumer staples were actually up. So for a big market sell-off to have any positive performing sector, that's kind of rare, but it was up by a whopping 12 basis points, consumer staples. And so again, you had a pretty logical flow of the riskiest areas doing the worst and the safest areas doing the best, or most defensive areas, if you will. But I want to address that. The Wall Street Journal had a story that came out yesterday in which I was quoted. They interviewed me on Friday and put together a little piece. And some of the material that's covered in that article, the link to that article is in Dividend Cafe today, was stuff that I'd already been writing into today's Div Cafe myself, which is that I'm not sure a lot of people are following what's happening within the Magnificent Seven. And I don't just mean by that the decorrelation of the names within it, which is itself a pretty big story. That you have Google, which is up 67% over the last year. NVIDIA is still up more than the market, not as much as it used to. It's up 30% over the last year. That's a great return in any 12-month period, although it's down 15.5% from its high back in late October. But if you look at the rest of the Mag 7, going back a whole year now, okay, Tesla's down a tiny bit. Meta is down a tiny bit. Microsoft's up, but less than 7%. Apple's up, but less than 10%. Amazon's up, but only 3%. Substantially sub-market returns, and in two cases negative, for 5 of the 7 Mag 7. This is not a market that is living off of the Mag 7 at all. And the Mag 7 is not a thing. When one company in a 1-year period is down 1% and another company is up 67%, that's not a very high correlation in one particular theme or basket. So year to date, it's not been very good here in the Mag 7. I would add that it's down as a group 4%. Only Google and Amazon are up at all year to date. The other 5 are all negative. But the reason I bring it up is, first of all, There's relevance for index investors when the top companies make up, 40% of the market and only 25% of the earnings. But I also would say that there's a healthy broadening in the market, that everything I just said about Mag 7 has been true, and that the market's done as well as it's done. And obviously today was a sell-off day behind this soap opera with the White House. But my point is that the Mag 7 is not carrying the whole market, and the data has really become quite interesting, in my opinion. Now, you talk about broadening of the market, the Dow Jones Transport average, we're so used to talking about the industrial average, had hit an all-time high. It had been down for quite some time, staggering around. It hit an all-time high coming into today. You've also had, very positive price action in emerging markets, industrial metals, global shipping stocks. I think that that all points to this global cyclical story reflating, being reinforced. But what you don't really see yet, although you had some of it today, but that could have been from the trade drama, is higher bond yields. Higher bond yields combined with these other areas of the market going higher is a big reinforcement of the pro-cyclical story. But what do higher bond yields do for expensive growth stocks? They pummel valuations. So there's a few things at play right now that have the potential to get very interesting in markets. I think that, when people want to know my take on what happened today, happened over the weekend, I continue to believe that the 1 day story, the 2 day story, the 1 week story, that is going to be where a lot of people are focused. It's not going to be where I'm focused. I continue to very, very, very much believe in President Trump's incorrigible market discipline fear that markets, whether it's stock or bond or both, at some point force his hand. And yet what I would suggest is that it's entirely possible that there's more escalation from here around his threats and then European counter threats. And that could lead to more short-term market volatility and uncertainty. I also believe it's entirely possible that as soon as his Davos speech tomorrow, that there could be de-escalation. There could be some sign of an off-ramp. That allows prices to sort of recalibrate. Um, I also think it's possible that it's all the above, that maybe there's additional volatility and pain, and then a capitulation that results in market stabilization. So I don't have a take as to when and what will happen, but I do believe that the questions of, does this now represent the moment in which all Western alliances are over as it pertains to economic market response? I do not. And I believe that that has everything to do with President Trump's pathology, despite the policy side that is at least being articulated. Secretary Bahnsen did come out today and say, and I quote, "I urge our European trading partners to take a deep breath and let it all play out." I assume that means, come on, guys, he doesn't mean it. But perhaps, the president has to move a little further on some of this. The other thing that I have to say about today is I'm not at all convinced that the only thing that pushed markets down, I definitely think the first half of the day was entirely absorbing what we had already seen in overnight futures action. And keep in mind, European markets, some of which were up yesterday, were open yesterday. So we already saw some of this over the weekend. We just happened to have a market holiday yesterday for MLK Day. But by the way, the market event today around trade tariff threats, Greenland, Europe, was not the only story, because where markets took another few hundred points down was near the end of the day, middle to end of the day, when the Supreme Court announced they weren't going to have a tariff ruling, and it's going to be like late February. And first of all, just part of me is frustrated because I think this should have taken 5 seconds to rule in favor of the appeals court. But apart from me playing the role of judge here, why this will last another 5 weeks, it does exacerbate uncertainty. And I don't think markets liked that at all. So that isn't going to get covered as much, but that was a big part of what happened in markets today. Let me kind of wrap things up. There's a lot in Dividend Cafe on housing and mortgage today. Some of the things that are expected. I don't know if President Trump's speech in Davos is going to cover this or not. It sounds like now he's pivoting his speech to be entirely about Greenland and his expectations for European cooperation. Um, Previously, he had sort of telegraphed he was going to talk about policy steps around U.S. housing at Davos. He may save some of that for the pending State of the Union, but they're talking about relaxing capital requirements at banks, which would, allow them to buy more treasuries and mortgage backed, and that theoretically puts downward pressure on yields and does it organically without manipulation. And I think that's a healthy thing. It's marginal for impact to housing, but it's not one of the policy things that bothers me, like some of the other issues. For example, the aforementioned plan of Fannie and Freddie being forced to buy $200 billion of MBS. Another idea, and my friend Steve Moore had an op-ed in the Wall Street Journal about this a week ago, but there is talk within the White House about changing capital gain tax rules on primary residence, indexing it to inflation, potentially exempting first-time home buyers, potentially both. I think that inflation index idea is brilliant and would be a needle mover. Now, that will require legislation in Congress, and yet theoretically could probably be done in reconciliation. And then the idea about allowing people to use their 401ks to buy, and then lowering tariffs, which is funny in a weekend where he's threatening all kinds of new tariffs, lowering tariffs on building products, which, yeah, I think that sounds like a very good idea, because the tariffs have hit construction costs, building products significantly. All right. Now, I don't know that they're actually talking about the last one, but I put it in my list. So with that said, we will see what comes out of Davos tomorrow. I will be writing for you in the daily recap what is the kind of latest and greatest as this saga goes on for tomorrow. More on the Fed, the fact that Kevin Hassett appears out of the running and Kevin Warsh appears to be in pole position for the new Fed chair, and why I believe that's a positive thing. And a little update on energy too. But we're out of time here for the video and podcast, so I need to direct you to dividendcafe.com, where you will find more in the written version and in your inbox as well. And I do thank you as always for listening, watching, and reading the Dividend Cafe.